talk more on those data points, we are now joined by the former statistician-general, Dr. Pali Lehohla, as well as Siphelele Chirwa, the CEO of Activate, a national youth development organization. Good to have you both, and thank you very much for your time tonight. And Dr. Pali, let me begin with you because you would be better placed to read these numbers and understand for us what is happening. From the last conversation you and I had, you said, well, partly we are not planning for the employment that we want to see. So we are just kind of shooting in the dark and hoping that, for example, we'll see a 5% growth and people are going to get employed. When you look at those numbers today and some of the policy decisions that we have taken, what is the picture that's beginning to form?
Well, I think we should go and look at the Economic Reconstruction and Recovery Plan, which is the panacea that government thinks will solve the problem. When you ask them and you look at the document itself and try to look at what number of jobs will be created as a consequence of that, you find nothing talking to employment in that. So basically the document doesn't answer the critical questions of joblessness, inequality, and poverty. So such a document is useless, yet government is actually hovering around it. At best, that document, in terms of just economic growth, is going to give you about 1.2 percentage points growth. And that's the difficulty. But let me step back a bit, and say in 2020, at the onset of COVID, business approached government with a document that had 1,000 pages, with a laundry list of things that needed to be done. Well, I don't have a lot of faith in the things that they said should be done. But what I had in that document, which was very good, was the targets that Business for South Africa said to government. If we do all these things that we have in the 1,000 pages, we'll reduce unemployment to 14%, we'll reduce inequality to 0.43% Gini, 4.43 Gini coefficient, we'll drop debt to GDP ratio to 60%, and we will grow by 5.2%. When we looked at those numbers and compared them with the Applied Development Research Solutions, ADRS, which has such high competence in terms of modeling, the numbers were very, very comparable. What was lacking in business was that there was no path. However, what one would have expected from government would have been, let us sit down with a business and then deploy the modeling systems to define the path that takes us there. That didn't happen. So when you see this kind of things, it's no different from what I would have measured a number of years ago, that we stand up in big podiums and say our triple challenges of unemployment, inequality, and poverty are the real challenges, the real evil. Now we have added energy crisis, we have added crime crisis, and we have added logistics crisis. Now, you wonder what it is that this government is trying to do.
That's the question. Yeah, it's a big thing. Siphelele, how do you see it? Why are we failing to activate the labor markets to absorb young people?
I think with what the doctor has said, for me, as the person in the organization that's always on the ground with young people, is that you take the numbers that Stats SA would give out as a report, but what we see on the ground and that percentage that people will always speak about, and the numbers of like 21,000 job losses in the first quarter, how does that translate to what we see on the ground with young people and the mitigation strategies that government has been coming up with? And most of them have not really bear fruit to seeing the unemployment rates reduced. So how do we take things like policies and take things like those wordy documents that would translate to young people on the ground who are struggling every day to make ends meet? So how are we not sitting around the table to see and not repeat the same strategies that have not been helping young people, and maybe from our part, the youth that we work with, that, it's good to, like the doctor said, the great doctor said, you can stand on the podium and give us the numbers and give us your policies and give us your strategies. But if those strategies are not being implemented in a way that is bearing fruit, what are we doing as the whole country? It's not a government's responsibility, it's not business responsibility, but it's everybody's responsibility to say, this is very alarming that at each and every quarter, each and every year, the unemployment rate is growing and the job losses keep being a continuous thing that we look upon and go on as if nothing is changing. And a lot is changing in a way of saying things are not working for young people on the ground. Yeah, no, absolutely.
Dr. Lehohla, your colleagues at UCT did a little bit of modeling. I don't know if you saw this article, but Professor Harun Borat says, he serves as at the Presidential Economic Advisory Council. He says that 350 a month grant has absolutely no impact on employment outcomes relative to someone that did not have a grant. And so in many ways, the longer run effects of the SRD on the labor market on increasing the probability of employment is actually zero. Would you say that is true on that grant or on any grant whatsoever, that particular policy and that use of money is not having any impact on the labor market?
Well, the government has chosen a minimalist view that at least shame, that's all we can do. And this kind of minimalist policies don't actually answer the questions. They are not anchored in the motions of economics. They are just a big thumbsuck, turning people into, paupers, having to queue for 350 rands. And they say, yes, it's still better, it's better than nothing. Where is 350 better than nothing? It's absolutely nothing. And it's based on something that has not even been modeled. This is the tragedy that this country is going into. A big country, a sophisticated country like this one, if it cannot foresee what the implications and the impact of what it is doing are, then it is doomed. And this back of the envelope calculations that a massive government like this one is engaged in, it's absolutely devastating. I mean, you wonder, where is the intelligence? Where are the tools? They think that by putting files side by side, they are getting the things right. Now, the IMF have just released a report that says nothing about how employment will be created. The only thing that it says is the governor, the Reserve Bank, is doing well and the fundamentals are intact. What are the fundamentals? The Reserve Bank's mandate, at least for now, is inflation targeting, or at least protecting the rand, as well as ensuring sustainable growth. On sustainable growth, the Reserve Bank is failing, and nobody is taking them to task, because that dual mandate has to look at sustainable growth. And sustainable growth that we get is 0.1%, 0.7%. So there are gaps that we are actually refusing to focus on, and actually having to ask IMF, what does it mean by saying the indicators, the macroeconomics framework is still stable? And what macroeconomic framework is stable when you have people 36% unemployment, which when you look at the expanded definition is 52%? Where the youth have lost, where the youth in 2008, those are 15 to 24, 1.6 million of them were employed in 2008. Today, against a growing population, only 1 million are employed. Where those who are 24 to 35, in 2008, there were 4.8 million of them employed. Today, only 4.5 million in a growing population. The only growth we see is in those who are 34 and above. If a youth looks at that, surely you would be mad to have hope. Is
there, though, a better place where we can put this money? If those 350 50 they combine and they make a couple of billions. Is there a better way of investing that money in a way that will bring us that growth that you're talking about? Are there areas or sectors where we could be putting that money?
It's not so much the sectors. It's about how you bring things together in policy terms and then look at the impacts that cut across. Obviously, big is big, and it can change the needle. But it will not go far if you don't deal with the macroeconomic framework, which the IMF says they are happy with, and we say we are happy with as government. I don't see what we are happy with on that kind of advice. It's when you combine the big with the macroeconomic framework, which the government doesn't want to touch, because the IMF says don't touch that one. It's back to 1996 gear. We have to think about what happened between 2002 2008, where there was expansion in lending. Credit extension was growing at double digit. Gross fixed capital formation was growing at double digit.
Right, we're back live tonight. Dr. Pali Lehohla, former statistician-general, as well as Activate CEO Siphelele Chirwa. Siphelele, when I mentioned the 350 social release of distress grant not having any impact on the labor market, I saw you nodding your head. You agree with that view?
I do agree with that view because I want us to be realistic on what does 350 mean to a young person in South Africa right now. We haven't started even having a conversation about even the infrastructure of making sure that every young person is not left behind. At some point, we're hearing that it depends on whether your luck or you rolled the right dice to be able to receive the 350. Moving on to say, let us be realistic. How much is a loaf of bread in a household in that 350? What is the intention of the 350 in helping a young person move from A to B? And I think when the doctor spoke about it's just an shame, there's something on the table. Young people can't live on their daily basis and having to leave their youth and their working age without having an employment and relying on the 350. A loaf of bread is almost 20 rand in South Africa. And 350, how much does that spread and how much does that carry a young person who's in need to be able to be employable? I mean, most of the time when I hear people speak about the 350, part of it is to say, go start your own business. And young people are saying to us on the ground, what business do I start as a young person with that 350? Are we just doing it because we want to get the indicators right for who and how are those indicators improving the lives of young people in South Africa? So 350 is there, but it cannot be the solution to this plight of unemployment. And also the 21,000 job losses are not coming to an economy that is thriving and allowing young people to cultivate and use that economy to better themselves. The job losses are landing on a high unemployment rate in the country and in the world. So there are a lot of things that are the gaps that are there that are not coming together for young people, and the frustration is growing because definitely we are seeing that the 350 is not the only solution, and it's not the solution that takes young people to where they need to go and our economy in South Africa.
Yeah. Dr. Lehohla, you're pointing out, I mean, undergrad students will tell you when they are introduced to economics, the two levers to manage macroeconomics that they are introduced to is fiscal policy and monetary policy. In terms of today's low-income countries, are we using those levers effectively, and how can we use them differently for the kind of growth that we want to see?
You see, I mean, in South Africa, the main tool that the Treasury, or rather the Reserve Bank, has used, it's a monetary policy, but it's basically using it for managing inflation instead of using monetary policy to look at money as a fiscal instrument to leverage and to actually ensure that the Reserve Bank is active in the economy. And that is why it is assigned the issue of sustainable growth. But the way the tools have been used are based on free market. And when things like unemployment rise in the way it does, the free market says there will be a market correction. It will gravitate towards equilibrium. So free market economics is about equilibrium. And therefore they avoid, or at least they are devoid of human agency, that things can actually change and there is no equilibrium.
Yeah. So let's put it
Because
simple. You're saying market liberalization will not equal economic growth.
Well, it's not market liberalization. You can liberalize your markets, but at a point in time to actually allow business to compete. Competition is fine, but it depends where you locate that competition. If you destroy things like ESCOM, if you destroy things like Transnet, if you destroy things like from energy to all these things, then you do not have that leverage that the Chinese, the Qing dynasty, which says use use that which is heavy to shoot at that which is light. You need stability. You cannot bring what I learned from a young man here. I was talking to Hugo. You cannot use entropy in energy to think that you'll achieve development. You need stability in energy. And that stability is what Smarts and Bayer did using coal. Now you want to use this variable energy, which is entropy, which generates entropy, and you think you can? You can't. You need something like nuclear or coal that is stable in terms of and energy. The cycles of these new renewables are 15-year cycles.
All right.
And that generates entropy. So in terms of thinking
about... in that context, you're saying things like free market, bid window 1 to 6, we must create competition for ESCOM. It's not necessarily the policy that we should be going for.
No, we can't. You cannot create entropy at something that is heavy, that which is heavy, that shoot at the light. You can create things. I mean, government doesn't have business to manufacture cars. No. Leave that to the market. But leave that which is heavy, such as rail, such as energy, such as health, such as education, in the hands of the state, in the hands of government, and use that to ensure that everyone is cushioned against entropy, the movements of the markets. But now we are actually privatizing everything. We are privatizing security, we are privatizing energy, we are privatizing all these things. That is not economics. That is not development economics. It's something else. And we should not be surprised when we get that which we get at the moment. So thinking about macroeconomics, thinking about fiscal and monetary policy, those are important levers. But if you put them in the context of free market fundamentalism, forget it, you'll never get it right, especially when context, such as South Africa, is not taken into account of high unemployment, high poverty, and high inequality, and low levels of education. So the governor of the Reserve Bank has said, well, the government is not doing anything about education. I mean, these guys have power. The Minister of Education, the governor of the Reserve Bank, the Treasury, and they cannot be pointing fingers to one the other. They actually have to think about what economic system will bring results. Now, because they are disjointed, because they don't have a plan, the best they can do is to point fingers at one the other and fail to realize that they are actually destroying that which is heavy, that should shoot at that which is light.
Interesting. I'm going to come back to that in a moment. But are there other policy levers that can help kickstart growth? For example, this article that I'm referring to around the SRD grant suggests that more money should be invested in in the informal sectors. But not only that, they're saying remove regulations around informal sectors. Let the people trade there, because that informal sector can certainly stimulate a lot of economic activity and get a whole lot of people actually employed, or at least economically active.
Sure. I mean, it's one of many solutions. We can't look at the unemployment plight and think that we're going to have one way of dealing with it. Of course, making sure that the informal trading in South Africa becomes available for everybody to be able to participate in the economy. That's one great way. But the biggest question for me is that as policymakers, if you're asking the question of policy, how tuned are we on what is really happening on the ground in communities in South Africa? We can sit and be policymakers and make the laws and make the regulations, but are we really understanding and hearing what is happening on the ground to meet that is needed to happen for the country to move economically? So that's the biggest question. Sometimes we question ourselves and saying, do we really understand what's happening on the ground, or what's happening in communities, and what young people are really going through, for them to understand how do we now allow them to be policymakers and be part of those conversations, because they're the ones that are feeling the plight on the ground. So for me, it's not a one-way respond to how to turn the economy around and to turn the rate of unemployment, or to improve it, so to speak. So, of course, there are many ways that we can't. And my biggest response for that and the other response was about what are these indicators that show the growth of an economy, and who is benefiting from these indicators as a country. Those are some of the fundamental questions of saying, how are we rating ourselves as an economy, and what are we doing for those that we need to serve in the country, not beyond the eye of just this is who we are as a South African economy, but are the people on the ground reflecting exactly what you're saying when you're saying that South African economy is a growing and developing economy? Can we all sit and say, yes, this is the truth of the economy? I think we will find out that a lot of young people, which is the people that we work with, do not even feel like they are part of this economy because they've been sidelined so many times. So policies, yes, but policies can just be policies if they are not really transferred into a clear implementation plan on how to change this plight that we find ourselves in.
So, Dr. Lehohla, one of those measures is what you've already mentioned, inflation targeting. I had Trevor Shaku the other day. He says, no, this thing of inflation targeting only serves the banks. To answer the question of Siphelele, who does this thing of inflation targeting by raising interest rates actually serve, and why are we using that measure?
Well, I mean, if you look at inflation targeting and interest rates, in many ways you find that the relationship is so spurious. There's no relationship in it at all. You look at many countries where inflation targeting and interest rates, there really is no relationship. So to use it as an instrument doesn't have an economic base, particularly when you use it blind to the fact that the Phillips curve is a relationship between inflation and employment. Now, when you look at only one side of that economic theory, without looking at what its implications on employment are, or what the implications of employment on inflation are, it's actually done eclectically, and therefore misses out on the fundamental economics of it. And that's what we have done in South Africa. It's not related to employment, the inflation targeting. So inflation and employment are twins in the economics of economic management. Now, if you look at the one without having any responsibility on employment, it's actually an eclectic and a foolish approach to inflation targeting. So what we see is therefore financialization, which means that instead of investing in the real sector, people go into financial markets where the money can lazily make returns. obviously, people argue that inflation hits the poor the worst. The poor do not have any money, so whatever it is, inflation of 8% or 2% on zero income is still zero. So these arguments that actually do not go into the fundamentals of what happens, it doesn't make sense. Real interest rates real growth has been lower than inflation throughout. And the problem is this inflation targeting, therefore not impacting on real growth? And when you use it as just one thing, one tool, without looking at employment, it's theoretically or actually undermines its theoretical foundations by flip scale.
Yeah. And what are the possible implications then if we are continuing in this route for developing countries, particularly like South Africa?
Well, we have seen the results. We have not been better off. The path is set. And many want to argue that it is corruption. Yes, there is corruption, but it is not corruption that is setting the path for South Africa's growth. To try and do that is to avoid really dealing and confronting the economics. For 3 decades, South Africa has been trapped in this, except for 4 years or 5 years between 2002 and 2008. And had we followed what happened in those years, because there was definitive concerted effort in changing the policy trajectory that was meant based on the Montclair scenarios of 1992. The problem is that we don't read these scenarios. We don't read the forces that set the path. The Montclair scenarios that were brought by Shell to Nelson Mandela and others at the time, and understandably that the world was shifting. Russia had just swallowed Milton Friedman's pill of free market fundamentalism. And in Russia, things got worse. Life expectancy dropped. People got poorer and everything, having been administered the shock therapy of Milton Friedman. When the ANC and liberation movements came out, there was no example of a successful socialist-leaning country. The best we could see in Africa was Mozambique and Angola. So you can understand the hard space that at the time of 1994 people were in.
Yeah.
2000, that changed. And we saw results up to 2008. But the financial crisis, when they came, we went back to the Montclair scenarios. And we have been in that space ever since. And there is no excuse at this point in time to say that we are still innocent. And then also to imbibe the pipe from IMF, which released chapter 4 or something that they released a few days ago, where they congratulate South Africa for sound fundamentals. And I'm saying, what is so sound when poverty is so high, where unemployment and so on? And those issues, they relegate to collateral of how the markets behave. That cannot be a beneficiary of market economics. It is central to policy formulation.
Sure. Siphelele, there is, of course, this view that there could be a possibility of some growth if we focus, for example, on the growth in manufactured exports. That could certainly bring benefits across a cross-section of the population and creating some kind of much-needed jobs. Are we interrogating that with any degree of seriousness, and how seriously are we taking it?
We are not yet serious when it comes to manufacturing. If you look at, some of the things that we're manufacturing and exporting, it's at a minimum in South Africa. We do have, but it's not at the rate that we are an economy that can compete when it comes to that across the globe. So I think part of it is going back to the drawing board and really utilizing ourselves and our skills and what the doctor has been speaking about how do we learn from each other as the whole country. I feel like we are very reactive as a country. We hop on from one way to the other without really interrogating some of the things and reflecting on what works and what doesn't work. It's not, I'm going to repeat again, it's not a one-way stream of how to work within the economy. But are we sitting down and reflecting and taking stock in a way that is of the benefit of the country? I feel there's a lot that we can learn. And as South Africa, we are starting to trust ourselves in really creating markets for ourselves, creating markets that will make ourselves very attractive for the world to see us as the powerhouse that we once thought we were. And being open to saying there are some mistakes and we'll continue making mistakes as a country, but at the same time, how do we learn and how do we reflect so that we can be proactive than reactive at many times in some of our policies and the way that we do things as people, as the country. So I feel like we need to take a pause. There's time for us as a country to take a pause and say, it's not improving. Are we having that conversation of saying it's not improving, and how do we improve it, and what are the ideas that lie not only in the government sector, not only in the business sector, not only in the economic sector, but what are we saying from different sectors, even as civil societies? How are we also taking part in making sure that this economy that belongs to all of us is working? We are pulling to many different directions. Everybody has an idea. Everybody thinks what they are doing for the economy is the right way, but we are not consolidating together. Yeah. How do we consolidate together as a country?
Dr. Lehohla, they've said in economics the key characteristic common in countries that are growing is the rapid growth of the export, particularly of manufacturers. Are we any close to that, and how true is that assertion?
You could actually do well if you manufacture and export, but it depends on what the inputs are. But let me come to a real situation in South Africa right now. We decided that we'll close a well-functioning coal-fired power station called Komati. And we closed others. Camden was just about to close, and it is having an energy availability factor of 81%. We say that Komati had run its course. It's almost like it committed suicide, when actually it was homicided by government. Government executed Komati. Then we go and say, let's get panels, this solar panels. We import all of them. 300 billion has now been spent on imports of those panels after we had destroyed Komati, which was pumping 1,000 megawatts, which is one load shedding. Now we actually go back to our neighbors, the pools, and we say, now can you give us 251 megawatts after we have destroyed our own 1,000 megawatts? When they were destroyed, it was said that, after all, it was not so significant. Yet we go with a begging bowl to ask for 250 megawatts. Now the window 5 that has been talked so much about is not coming to a close because those are more expensive to generate the 1,000 megawatts that we thought will come from there. Now tell me, where is wisdom of economics in this rubbish? All happening in the same government. Absolutely senseless. You can see that there is no economic thinking. And then the Reserve Bank says there will be load shedding, they have to secure their own path. You see, when the president rises in parliament, he says the chief of defense force, the governor of the Reserve Bank, refers to parliament. You expect during a crisis, these constitutional entities that are referenced at our highest moment of pride as a country, which is the State of the Nation address, come together and say, what should we do? The Chief of Defense, the Governor of the Reserve Bank, Parliament, Judiciary, and Government. Those are the arms of the state that are referenced. Those are the arms of the state that have to be protected. They are not giving us direction to protect the state. And that is why you see we are thinking of energy that generates a lot of entropy.
Yeah.
And we think that we are protecting the state. So fundamentally, the thinking of the state architecture is faulty. That is why we had to go and sign the Just Energy Transition, and the president is taking a U-turn now, says they were naive. So many people had said, this is wrong. He cannot say we were naive. They were not listening. And the government that doesn't listen ends up in this kind of thing.
Dr. Lehohla, let's leave it there. Much appreciated.
In my language, that's what happens when people don't listen. And when they don't listen to science.
We're not going to translate it. We'll leave it there because of time. Much appreciated. And thank you very much for coming on, both of you. I've got to take a break, but thank you very much for joining us in that conversation. Former Statistician-General there, Dr. Pali Lehohla, and Activate CEO Siphelele Chirwa.